Hey guys, this is market update. The next 12 months or so may be pretty wild for BTC. This is usually when we get really big bull market moves in the Bitcoin cycle, so I want to talk about that in this video. But for right now, being consistent is the main thing. If you look at this data, it shows that for the vast majority of time, Bitcoin actually doesn't do anything. It kind of sideways moves, chop solidates, as Checkmate calls it, right? Most of the time, there's just no moves. So you have to actually not look at the current price action. You have to look at what you think the fundamentals are going to be over that 12-month period. If you're trading for 12 months or if you're just investing in dollar cost averaging, right? But trading for 12 months, what's the outlook? I want to go through that in this video. Still in this range. Unbelievable. It's been like 30 weeks. It's insane, right? 30 weeks of just this downward chop solidation distribution. We're not breaking out of it. You can see there. Yeah, we did bounce from here, but we're just still in this into the election. And then when they actually start moving policy, when policy changes a little bit, we're going to get some action. And I think that's pretty positive for BTC. Whoever wins, it doesn't matter because more stimulus is coming, whoever wins. And so positive for BTC. And I want to explain that in this video. If you do trade crypto and you don't have Bybit yet, check the link down below. You can get a deposit bonus up to $30,000 via that link. We're going into a Fed rate cutting cycle. This is completely irrelevant. It's not going to change anything. Everyone knows it's coming. Everyone knows they're going to come down to around 2.5%, right? That's because they control inflation. Their fake measures of inflation, like PCE, going to be around 2%. And that's what they want it to be. So interest rates at 5% are ridiculous when real inflation for their metrics, their fake metrics, are around 2.5%. So they're going to bring it down to 2.5%. And then if it starts to go a little bit lower, they're going to cut interest rates below that to be about 1.5, 1.8, something like that to stimulate it up. We know that they want to control that to 2%. And so that's where it's going to be. They can control that because all the metrics are fake and all of the stimulus that they pour in is essentially designed to get this 2% inflation. So we know that. It's not exactly like a big news flash that they're going to cut rates to 2.5%. So the market's priced it, absolutely irrelevant at this point. It's untradeable. The real trade I'll get onto in a second, which is completely unaffordable debt spending. Stimulus must pour into markets to create this 2% inflation. Changing Fed fund rates against the SAM will trigger. This is kind of an unemployment trigger. If unemployment spikes above a little bit, usually what happens to interest rates, they're coming lower. Everyone knows rates are coming lower. They're going to come to 2.5%. So it's not a surprise. Nothing's going to happen along that. It's the surprise that we get with a high unemployment print or something like that. That doesn't seem to be happening. You can't invest for that. You can't invest for this tiny little narrow window where you may get some panic in the market. You have to invest over the longer term and buy the best assets. This is the CPI index trend as well. You can see CPI a lot higher. Above the trend of the last expansion. CPI is high, but if you go back to the 1990s, you can see that we actually had a period of low inflation. Now remember how much stimulus they poured in and currency debasement that had to happen to keep inflation higher. Remember, they want inflation, they require inflation because they require to debase the debt that was previously taken out. That's the only way that the fiat currency debt-based system works. We benefit from it as well by having cheaper debt over time on the debt that we take out. So it's not just them versus us, it's all of us together in this debt-based system knowing that we have to debase it. And so if you can take debt out at cheap levels, great. If you can't, then you're at a disadvantage because you're not taking advantage of essentially this currency debasement. And so Bitcoin is a way for people that can't take debt to actually gain a real asset. And it's a way for people that can take debt to maybe leverage that debt to buy BTC like Michael Saylor does. I don't recommend that. Just buy BTC and hold it and wait because the returns are insane, right? 40% a year right now. But stimulus will always occur to debase the currency to make sure that the debt is remaining payable over time. You can see this here. This is the federal budget, surplus and deficit. Insane deficits right now. So when they say the economy is strong because GDP is positive, look at the stimulus, look at the deficit that is required to keep it there. So I can't really look forward and say, wow, I'm so worried about a recession. We're literally in it now. We're living in it. Right? Because without this, we would be minus 10% GDP, right? Without this stimulus, GDP would absolutely be negative and the whole system would collapse on itself, the debt-based system. So we know that it's happening now. The stimulus is happening now. We're in the recession now. They are debasing the currency now in order to keep things positive. So I'm not worried about a recession in the future because they're doing it right now. And so they're going to continue to do it because we know they need GDP to remain positive and they need inflation to remain positive to debase the debt. They're in it now. So how are we going to collapse further? If it collapses further, guess what? Even more stimulus. This is the stimulus and this is the deficit. You can see the net interest right here is one of the largest outlays in the federal deficit, right? So this is important because this is actually changing over time as well. This has been like the second largest outlay in some months. This is the deficit for August. Take this deficit away. If the economy is doing well, take it away. Remove the deficit. What do you get? You would literally get a complete entire system collapse. So I cannot call for a recession. We're literally in it now. Without the deficit, you'd get minus GDP and the system would collapse. So the trade is to know that this deficit must continue, and it is just the rate at which this deficit occurs. Is it larger or smaller? But it is a deficit, and that means stimulus, currency debasement, asset prices go higher, and affordability of those assets also becomes more unaffordable for people that don't have them. So that is wealth inequality happening. You have to get into assets, and Bitcoin is a great savior from this, in my opinion. But of course, there are others as well that work. But Bitcoin is the trade of our generation. It's a sweet spot trade, young, still got a lot of returns in it, but potentially growing into one of the biggest assets in the world. So deficit spending will continue, absolutely, no matter who gets in power. And calling for a recession is ridiculous because without this deficit, we'd be in one. And so the deficit is there forever and always. And that is the trade. Getting out of that currency, using that debt-based system to leverage real assets, which is what Michael Saylor is doing. But obviously, I don't recommend any leverage, but this is the trade, right? Without this deficit, we're literally going minus GDP, minus 10%, 12%, huge spike in unemployment. So they don't let it happen. Without this deficit, we're in a recession. And so recession isn't coming, it's here. And so we need to get out of it. And the way we will become poorer is the assets going way up in price faster than our wages. And that's happening with Bitcoin and property and the stock market pretty much at all-time highs. Can we get a collapse? Yes, we can get a collapse if they want to take this deficit away, or if they want to shock us and give themselves cover to print even more money. But the fact is, the deficit is necessary, the spending is out of control, and the net interest is getting larger and larger and larger over time, which is why they need these cycles where they can actually drop interest rates, refinance, and kick the can down the road yet again. If we get a normal Bitcoin cycle, we've got around another year or so left of positive price action. You can see that the cycles are quite regular. So you have 3 positive years and then a big drawdown, 3 positive years and a drawdown, 3 positive years and a drawdown. So we've got 2023 here, which was a very good year. This year, I would suggest that 43% is not really an amazing performance this year, but of course we've got a few months left, and typically the winter is a pretty good time for the Bitcoin price, risk taking, and obviously you've got the election out of the way, and so people can start to price things in and be more confident in what's going to happen. And so look, there's a lot of change that could happen over the next few months. 43% is still the best performing large scale asset. Gold very good as well, maybe trying to price in a lot more inflation. But what's going to be happening, right? Rate cuts, a potential easing cycle. And what does that do? Well, that sparks inflation 12 to 18 months ahead of time. Now, risk assets price that in early. And what happens when there's inflation again? Well, you get the next drawdown cycle. And so that's the next bear market for BTC, and that will price that in, right? So it looks like we are just going through these cycles over and over and over again. Like I suggested, they need the cycles to happen to make sure everyone is looking the other way while they print money. And then that inflation rears its head 12 to 18 months later. Everyone gets worried. The central bank has to do something again. So these cycles seem to be persisting. And so it seems like we're just going through the normal cycles. Decent performance last year, decent performance this year, maybe decent performance next year. And then you have to worry about the bear market, maybe 2026 or so. If you look at a lot of technicals here as well, I'll just show the poster on this one. This is the Bitcoin price here. If you look at a lot of technicals, you have fear and greed index down near max fear. You have stochastic, very, very low right here. RSI also potentially breaking out here. You have global liquidity, which is already broken out, and you have the gold price breaking out. So a lot of these are suggesting that we are in a good setup for the price of BTC, where you've got this kind of drawdown, or a lot of risk taking has come out of the market. People are looking the other way, not really interested in crypto right now. But a lot of these are suggesting that potentially we get that bounce, and that would see us into 2025, which is usually for the Bitcoin cycle pretty good. Now, what you can see here as well is that this suggests that the reason why GDP is positive in the States is only because of stimulus. This is a big problem because the US continues to grow the deficit at roughly 8% of GDP, as can be seen, both track quite well over time. It's hard to ignore that nearly all of our current GDP growth is coming from government spending, right? So like I said, why should you worry about a recession when we're in one now, and the only thing keeping us positive with GDP and inflation is stimulus? So do you think they're going to take that stimulus away suddenly? And if they do, that would create a monumental crash. Bitcoin would go down 80%, and then they would have to print unlimited amounts of money to bail it out again. They always bail it out because we want it bailed out. We don't want everything to crash. We want everything to debase at 5 to 10% a year to give us the opportunity to actually escape that. This is the game, and the only game in town. Bitcoin is the way to play that. And it's the best way to play that, in my opinion. We can end with some Hopium as well. This is from Raoul Pal here. So this is the global M2 chart in black. Bitcoin as well. Global M2 is breaking out. There is some stimulus occurring. You've seen a lot of deflationary pressures out of China as well, and they're obviously stimulating at different rates. That stimulative, that debases currency, makes asset prices look more expensive. Remember, it's not really about making money in Bitcoin and selling it into that fiat currency. That will always debase. It makes Bitcoin appear more expensive in that fiat currency. But the real way to value Bitcoin is in goods and services and commodities, because they're the things you actually want to consume. You don't want to consume fiat currency. So we can see this as well. This is the GMI Total Liquidity Index versus BTC. That's some Hopium for the end of this video. If you trade crypto, check out Bybit, $30,000 deposit bonus. And the Crypto Investor course will be updated with a few more videos, completely free if you've got the course already. I'll leave that link down below as well. I'm James, this is Mazzy G. Cheers for watching, and I'll see you in the next one.